The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
Well, when it comes to finding value in stocks, our value strategist, Tracey Ryniec, makes a career out of it. She's back again with another couple recommendations for you to review. These are kind of interesting ones. I don't recall us talking about either of these, but you can correct me if I'm wrong.
No.
The first one, Virgin America, an Airbus operator.
Yeah, we haven't covered them. They went IPO last year, so they're fairly new on the airline scene. Whenever I think of Virgin, I always think of the big international airline, you know, flying from London and all of that stuff. But this is just the U.S. domestic, obviously Virgin America, so it's just the domestic version.
Right.
So they have 4 big hubs: San Francisco, JFK, LA, and Dallas. So if you've flown them, you know, you can fly them from Chicago to either of the coasts, basically. They have been tapping into that business and somewhat leisure group, but they're having a little bit of trouble expanding here in some of their areas, and they've been up against a lot of competition in Dallas, but Southwest has said the same thing. You know, they're down there in the Texas market, and so Texas is a little tough right here. But the analysts expect the Texas market to be improving, and they announced that they're going to start offering flights to Hawaii at the end of this year. They're going to have a lot of competition in Hawaii too. They're going to fly that out of San Francisco, but they're going to be competing against United and Hawaiian there. But it's an area of growth for them. People do like the Virgin name. They like flying on those planes, and you know, right now leisure travel and business, but especially leisure, is hot.
Yeah.
You can see the estimates are starting to trickle up here for this year because the analysts are getting a little more positive about the story, and we still have low fuel prices, so that's helping. They do hedge those prices, but they're hedging at this low level. So the fuel is helping them. Leisure, the consumer is still strong. That's helping them. And you can see the shares really have sold off since the IPO. They sank for most of this year. They're starting to turn around here. It's cheap. They're trading, you know, under 10 times here. And that's cheap. The airlines have historically always traded cheaper, though, so you got to kind of watch out for the value trap there. But I do think there's some value here, and you know, the expansion is there, and the brand is strong. So.
But for an IPO, only a year old, is that dip a little bit of a warning sign?
No, it just means I think people were a little too enthusiastic at the IPO.
At the open?
Yeah,
Okay.
and at the first couple of months, and then crude prices did plunge, and so the airline stocks were really hot. But then they came up with, you know, against some growth issues and now these capacity issues in the Texas market. So things have gotten a little bit more dicey, but, you know, it's at a better valuation here. So I do like the story of the airlines, and this is a smaller, you know, they only operate 53 jets, so it's a little bit smaller outfit.
Okay, let's talk about Valero Energy.
Yes.
The largest refiner in North America.
Yeah.
How's the oil story helping or hurting them?
Well, it's helping them, so that's the difference. You know, a lot of the energy stocks right now are really weak, and it's probably, you know, maybe not the greatest time to get into some of those, especially the explorers. But on the refining side, these are the guys who actually make the gasoline or the jet fuel or and chemicals and things like that from the crude. And so the story's good because the thing that's the crude spreads, those are favorable right now. So they had really high margins this last quarter. They were up 39% year over year. Their earnings were actually up 118% year over year. So they're generating this enormous amount of cash flow right now because the conditions are basically ideal for them. And they're giving it back to the shareholders. They pay a dividend of 2.3%.
Yeah, I saw that.
Yeah, that's not so bad. And then they're also doing a huge share repurchase program. They just added another 2.5 billion, so they have a 2.9 billion program ongoing for that. They also said they see the second half of the year still being really positive for them, and these conditions still continuing. So the story is good. If they're going to keep generating this kind of cash flow, you can see the earnings estimates here are up significantly for this year in the past 90 days. Estimates up about 18% year over year.
Yeah.
Next year, analysts don't really know yet what's going to happen. All depends on the spreads, what crude prices do, all these things. So they see a little bit of a decline next year, but some of the analysts are starting to push that up already. So I wouldn't look too far ahead. All we know is that the rest of this year is expected to be good. You can see the shares. This is one of the few in the energy sector that's actually going up. It's near its 2-year high here. But, you know, shares are cheap in this area too. They're trading under 10 times as well. So I like the story. If you're willing to be in it for the next couple months, this is a good place to hide out in energy. I still see some more upside even with the shares at this level because these conditions should continue.
All right, enjoy it while you can.
Yep.
Do you own either of these two?
I do not.
All right, check out other stock picks, stock picking strategies, and other stock commentary on our website, Zacks.com. If you're not there watching this video, or any of our videos for that matter, get on over. You can link to all of that information right off the home page. With Tracey, I'm Terry Ruffalo.